Well, good morning. It's Michael DeVille coming to you from beautiful Phoenix, Arizona. It is October 10th, 2020. I'd like to review some of the questions that we had from our webinar on Tuesday. It's kind of just a kind of a boring subject. It's an accounting term on depreciation for our rentals. But of course, lots of people don't realize how great a tax advantage asset class real estate rentals are. They had no idea. We've often talked about the fact that as a real estate rental, you have no caps on the interest that you're going to pay. You have no caps on the amount of real estate taxes that you're going to pay. And of course, that we can defer all our capital gains by using a simple technique called a 1031 exchange. But we talked about depreciation last Tuesday, and lots of questions came up because people did not realize that you get to deduct the entire cost of the structure that you paid for in your real estate transaction from your taxes. The entire cost of that building gets deducted over 27 and a half years. What a great advantage that is. And Uncle Sam gives you this advantage. The Congress has done that because real estate has lots of capital intensity to it, and they want to incentivize lots of the investors to go ahead and invest in this class. Let's just think about the real estate rental. First off, investors like myself and my clients are baby boomers. We need that income. We want that income to be streaming to us because it pays for all our bills and gives us money to spend, and we can have some fun with it, and it's a great use for our capital. But the use for the capital, we're providing housing for lots of people. Now, keep in mind, not everyone can afford a house, but everyone needs a place to live. There's also lots of people who don't want to own any longer. They don't want the responsibility of having to do repairs, because houses they're constantly in need of repairs. We just need to maintain these things. If the air conditioning goes out, lots of people just want to call the landlord and say, the air conditioning isn't taken care of. Would you take care of that for me? That's what your management company does. They handle all these little day-to-day nuisances, but it's put on someone else's lap. They don't want to do it themselves any longer. So as investors, we provide a shelter for these folks. It's a basic need. And for that, the Congress has decided to give us a very, very nice tax advantage. Not only do we provide shelter, but just think of the people who are provided income and revenue and jobs just from a standard transaction of purchasing a rental. Not only are the real estate agents paid, the seller gets cashes in on their capital gains that they've earned, but you have real estate appraisers, you have inspectors, you have the people that do the repairs that the inspectors find, you have termite people, you have inspections, you have title people, you have escrow people, you have lenders, you have underwriters, you have insurance people. You have all kinds of people that go out, and then once they move into the property, there's all kinds of furnishings and draperies and landscaping and tools that are bought. It's just an enormous incentive for the economy to do business. There's just lots and lots of income and cash is being spent on these investments. And of course, that's done because the investor is providing capital. Now, when you think about our advantage that we get to deduct the entire cost of the structure, not the land now, but the entire cost of the structure from your taxes over 27 and a half years, the whole cost, whatever it cost when you purchase that property gets deducted from your taxes over 27 and a half years. What a great tax advantage. Now, we talk about having a goal of 10 properties. Now, that's just an artificial goal that I provide for people. It can be 5, it can be 15, it can be 20, it can be 100 properties for yourself. You decide where you want to stop. But let's talk about the benefits of just having 10 properties that you've accumulated. If you're like a baby boomer like me that's waiting and using this money to pay for our bills, it's our retirement plan. Well, if you have 10 properties here in Maricopa County, they're going to generate between $1,000 and $1,200 net cash flow. Now, that's after the management company's been paid, after the taxes been paid, HOA's been paid. We're escrowing for repairs. We're taking, in fact, vacancy factor and cost of sales. We're still going to get $1,000 to $1,200 a month. If you had 10 properties and it's just $1,000, it's $12,000 a month that you're getting in. Or I'm sorry, $10,000 a month times 12, that's $120,000 a year. And you have 10 properties. If you paid $300,000 a property and considered that 15% of the purchase price was the lot, because we can't depreciate the land, but that would give you $255,000 to depreciate, which is $9,200 a property times 10 properties, $92,000. So if you had $120,000 of income and you had 10 properties giving you $92,000 in depreciation, comes right off your taxable income. That'd give you about $28,000. You take your standard deduction between your husband and wife, $24,000. You're down to a taxable income of about $4,000. So that $120,000 would basically come to you tax-free. So what a great deal that is. We do this on a day-by-day basis. If we can help in any way, talk to your financial advisor, talk to your accountant, see how this is going to work for you. I'm more than happy to sit down and talk to any of you guys. This is what we do every single day. And if I have done my job right, not only do you get a great income, but you get it basically tax-free. What a great deal. So listen, I'm here in Phoenix, 602-942-4200, or you can get hold of me at michael@michaeldeville.com. My very best to you. Bye-bye.